Hello everyone, welcome back to my YouTube channel. My name is Natalie and I'm posting videos every Monday and Friday about finance and sustainability. If you're new to the channel and are interested in learning of any of these topics, please subscribe in the button down below. In this video, I'm going to be talking about credit score. I chose this topic because I feel like a lot of people have a vague idea of what this is, and I believe that knowing your credit score is a really important part of your financial life. So let's get started. A credit score is a number based on specific information on your credit report. A credit report is a summary on how you pay your financial obligations. In Canada, the credit score goes from 300 up to 900. However, this also depends on the credit agency. The higher the score, the better, because higher score basically tell lenders that you're more likely to repay any debts, any loan or credit card or bill, you're more likely to make these payments. Here there's a source from Equifax Canada, and this is a breakdown of credit score ranges and what each range means in terms of your general ability to qualify for lending or credit requests such as loans or mortgage. You're considered to have a poor credit if your score is 559 or under. If you fall in this category, your credit needs some work. So keep watching this video for some tips. On the other hand, if you have a score of 760 or higher, you're considered to have an excellent credit. I believe that having an understanding of your credit situation is going to make it easier for you to improve your credit score. Now, I'm going to tell you the different factors that affect your credit score, and there are five of them. The first one is your payment history, and it makes up 35% of your credit score. It's the most important factor of your credit score. So, this will reflect how you pay all your consumer debts, such as loans, credit cards, bills, and so on. It tells you the frequency of your payments, if you make payments on time, any amount due, and also any negative information on your credit report, such as bankruptcy. The second factor is amounts owed, and this makes 30% of your credit score. This will basically tell you how much of your credit availability you use on an ongoing basis. For example, let's say you have a credit card with a 10,000 credit limit and you max it all out. These will have a negative impact on your credit score because it basically tells lenders that you're high risk. So, in order to boost your credit score, it's better to have a lower credit utilization. There's a rule that says that it's better to use 30% or lower of your credit limit. So, in our case, will be 3,000 or less. The third factor is length of credit history. This one makes up 15% of your credit score. This factor basically reflects the length of time since you first obtained credit and also the length of time since your account's most recent action. You know, time is needed to get a true picture of how responsible you are with credit. So, the longer you have an account open and with good payment history, the better. The fourth factor is new accounts, and it makes up 10% of your credit score. This one reflects how many times you have applied for credit and also the time it has passed since you opened any new accounts. Applying for credit is not bad as long as you know it's going to be beneficial for you. So if you go to credit shopping, you go to store and someone offers you a credit card and you decide to apply, just keep in mind that every time you do that, your credit score is gonna decrease. So it's really important that you know that you're gonna be using this credit card not only because it decreases your credit score, but also because there's no point of applying if you're not gonna use it and you're not going to create any credit history. Finally, the last one is credit mix, and it makes the last 10% of your credit score. This one is a little bit vague. However, it shows the variety of debt products that you currently have and how you handle them. If you have different type of revolving credits or installment loans, basically it will show lenders that you are less risky than someone who has never had credit. Now that you know the different factors that affect your credit score, it's gonna be easier for you to identify the ones that you need to improve. However, now I'm gonna give you three tips on how to boost your credit score. So the biggest tip that I could give you is use that credit. If you have a credit card, please make sure you use it and repay it on time. So this way you'll build credit history and you will also build a good payment history. But remember, it's not only about credit cards, it's also about your bills. So any bills that you have, such as phone, internet, cable, and so on, try to make the payments on time. If you, by some reason, don't remember that you have to pay them, just set up pre-authorized payments. So it's going to be easier for you to not forget and build a good payment history. The second one is lower your balances. So, as I mentioned before, credit utilization is really important. Try not to max out all your credit cards and use 30% or less to improve your credit score. And the third one is check your credit regularly. It is not bad to check your credit reports. It won't affect your credit score at all. And also, it will help you identify any type of fraudulent activity. Because if you don't check your credit report, you never know if someone is opening accounts on your behalf. And in the future, if you want to apply for a mortgage or something, and let's say someone use your name or your information to open an account and they never pay it, it's going to be harder for you to get rid of that in your credit report. Finally, I just want to remind you that a credit score is not a reflection of your personal worth. It's just a credit reporting tool. So if you have a low score, don't worry about it. Just try to work on it and increase it. If you like this video, please give it a big thumbs up. And also, I would like to know in the comments down below how you keep track of your credit score. I personally use Borrowell and I've been using it for 2 years. I really like it, especially the app, because it lets you see all your progress and also it tells you details such as why has your credit score decreased, and there's a credit coach as well. So it's really useful app. I will recommend you to use it. However, there's others such as Credit Karma. I will leave you the description on the description box below. Also, let me know any tricks that you have to boost your credit score. And if you have no idea what your credit score is, I encourage you to go and find out. Thanks for watching and see you next Friday.